तो सेम दिख रही है और क्या हो गया? यू नॉट फीलिंग वेल और
अरे मैम क्या पता वो आपको बहुत सर दुख रहा है। कल रात से कुछ भी नहीं खाया मैंने।
क्यों?
मैम आज शाम को बारबेक्यू नेशन जाने का प्लान है तो वहाँ फुल पैसा वसूल करना है।
तेरे जैसे लोग जाएंगे ना बारबेक्यू में, तब भी कंपनी प्रॉफिट में आने के कुछ तो चांसेस बनेंगे। Hey folks, see Rachana Ranade here and I welcome you all to an interesting IPO review about Barbeque Nations Hospitality Limited. We are going to talk about a lot about this company. The industry analysis part for this one is going to be a very special one. One more fun fact is there which is like awesome. That's going to come at the end of the video. So don't forget to watch this video till the end. And of course, as I always say, if you want to increase your chances of allotment, do check out the link in the description box wherein you can open an account with Zerodha. Now let's understand what does the company own and operate. They own and operate Barbeque Nation Restaurants and Toscano Restaurants. Now let's understand about both these restaurants a little bit in detail. Barbeque Nation is one of the leading CDRs, which is a casual dining restaurant. How on what basis can I say it's a leading restaurant? Leading in terms of number of outlets, right? Number two, it has also national and international presence. And one more important point is that if you want to enjoy barbecue food at home, then they do that with the help of UBQ, which is a delivery system. So in simple words, if you want, you can order food through this UBQ segment. You can order food of Barbeque Nation at home. So the second one is Toscano Restaurants. They focus on Italian cuisine and they operate under two brands, which is Le Terrace and Collage. So if I were to bifurcate this, Barbeque Nation focuses more on Indian food and Toscano focuses more on Italian food. Let's also understand about the presence of their restaurants. Like in India, they have 147 outlets in 77 cities. But if I talk about abroad, outside India, then it has 6 outlets and they have presence in 3 countries. Let's also understand what do they offer in barbecue. They are the pioneers of the format of over-the-table barbecue. So they say OTT. OTT is not our OTT platforms like Netflix and all that. OTT is over-the-table barbecue. Now what is this? Generally, before Barbeque Nation came in, whenever we used to order barbecue, any grilled stuff, the chef used to grill it and just directly serve at the table. If you have ever been to barbecue, what we do? We grill at our own table. So they are the pioneers in that. Second important point, as I mentioned, they are more into live grills. We are the ones, like we are the chefs. We grill, we eat. That's how they operate. One more point is that they also serve a wide range of vegetarian and non-vegetarian food, and they also run popular food festivals like Hakuna Matata, Jewels of the Sea, and whatever. You can see that in the slide as well. Chalo, so now instead of talking more about economy analysis, which everyone knows by heart, V-shape recovery and all that, I think it's time to move on to industry analysis because I found a lot of interesting data in industry analysis. It's going to be a fun part of this video. The very first one is analysis of young population in India. If you can check out this graph, you can see that the median age, it's like an average age, for Indians is 28.7 years. And if you compare it with other countries like China, USA, we have a very young population in our country. Is that going to be favorable for this company? Answer is obviously yes. Number two, you can check out this graph again. It talks about the dependency ratio. So dependency ratio is if this graph is going down from 77% in 1960 to 49% in 2020, it means that the dependent population, which can be like children or it could be aged people, these are going down. And in simple words, I can say that the working population is increasing. If working population increases, is that going to be favorable? Yes. Now, which working population is increasing? Is it only men or is it also women? So again, a super fantastic ratio, data point which I found that between 2005 to 2015, enrollment of girls in secondary education increased from 45.3% to 81%. And in financial year 19, the enrollment of girls in secondary higher education was higher than boys. Now, you might be wondering, some people might be wondering that if more and more girls are enrolling in secondary education, then what? Obviously, their employability increases, right? And that we can clear cut see about the overall share of working women, which was approximately just 14% in 2000. It has increased to 24% in 2018. Now with all these things, can I say automatically the overall earning of the family is going to increase? Obviously yes. This has led to increase in the middle class. Growing middle class is what we can see in India right now. See, only one person being a bread earner in the family versus two people being bread earners in the family is going to definitely have a positive impact on the overall earnings of a household, right? So the rate at which middle class is growing in India is at a CAGR of 12%. If you just want to know what is the definition of middle class, it means that annual earnings of the household of the entire family is 5,000 to 10,000 US dollars. In Indian terms, at an upper end, it is roughly 7,20,000 per annum. So I think all these points, which all these points, number one, young population, number of dependent population going down, number of women increasing, working women increasing, number of, I mean, the growing middle class, are all these points absolutely favorable for the company? Answer is yes, right? Urbanization is also increasing. So more and more urbanization, people are going to have a more inclination towards eating outside. So all these points, as I hope you have understood, are positive for the company. Happy with industry analysis? No? You want to learn more? Okay. So let's move on with industry analysis part 2 this time. For the first time we are doing this industry analysis in more detail, right? Let's start with this point, that how is the overall food service industry placed right now? The overall food service industry size is 56.5 billion USD right now. If I compare how much percentage it is contributing to GDP, you can check out in this graph that overall it contributes 2.1% to the overall GDP in India. So this is a position in India. Even if you compare our position, how much overall food is contributing to GDP, even US is just contributing 2.6% to their GDP. If I talk about UK, they are contributing 2.7% to their GDP. If I check Saudi Arabia, they are contributing 2.6% to GDP. So in simple words, generally you see that India is somewhere down below, but here you can see that food, we all are foodies, right? So food service industry as a whole is contributing 2.1% to the Indian GDP, right? If I now talk about how much is the average spend per person. So for example, if you go to a hotel, okay, if you go to a proper, I should not be using the word hotel, if you go to a restaurant, we generally use the word hotel. Hotel is where you will have a place to stay, and restaurant is only eating. Okay, so that's the difference. So if you go to a normal restaurant, on an average, the average spend per person is generally above 1,000 if you're going to a good restaurant. Now there are so many subcategories in the restaurants, like you have cafes, QSR, quick service restaurants, FD, so many points. By the way, I've explained each and every category of these in my Burger King IPO video, so if you want, you can check out what are all these subcategories, right? Where does this company fit into? Barbeque Nation fits into the casual dining restaurant category, and here, as an industry standard, the average spend per person is 250 to 1,000 rupees. In simple words, if any person goes to a casual dining restaurant, per person bill will be somewhere between 250 to 1,000 rupees. What is the average bill size of Barbeque Nation? They mentioned that as at 30th November 2020, for them, it's 2,757 rupees. So in simple words, can I say they are way above their industry standard? Answer is obviously yes. Moving on to one more interesting data point, the overall food service market is expected to grow at a CAGR of 9%. Where does this company fit into? They fit into chain markets. And if you check out chain market size is also growing from 6.1% in 2015 to 9.4% in 2020, and it is expected to be at 14.9% in 2025. Now, if I talk about this, whatever point I was talking about, it was about the overall entire food service market. Now let us focus only on organized, because see, overall food service will have organized market plus unorganized market. That was expected to grow at 9% CAGR. If I talk only about organized food market, it is expected to grow at 14% CAGR. What about Barbeque Nation? It fits into organized or unorganized? Obviously in the organized segment, right? Now, if you talk about the spending patterns, see, there are multiple data points here again. It's about eating out frequency per month, average spend outing, ordering in frequency, average spend, sorry. If you see all data points, everything is going up, right? Why? I talked about the demographics some time back, right? So all are going up. It's a good sign for this company. Let me know in the comment section how frequently do you dine out or order food per week, because per month will be, I guess, a crazy number. Per week, at least, either you go out for dining or you order food. How much is for you? Let me know in the comment section. Why did I say this? The last data point is an interesting data point. In 2016, if you check, So the blue one is about restaurant to consumer. So a consumer goes to the restaurant and eats. That was 4.4, and only zero point 0.3 is what platform to consumer. So it's like an online food delivery. So it was predominant for 2016 restaurants to consumer, but if you check in 2020, it is almost equal, and 2025 expected is that online food ordering will be more as compared to customer to restaurant. Let's start with the financials part now. If you check out, total revenue is growing at a CAGR of 20%, good one. EBITDA growing at a rate of 9.4% CAGR, again I can say definitely above average. PAT is growing at a CAGR of 138.3%, but it's not PAT, it's LAT. What is LAT? Time pass ke liye. It's loss after tax. It's not profit after tax. Okay, so that is growing at 138% CAGR. That's a dangerous number. Total assets are growing at a good CAGR at 14.9%. Now you might be wondering that EBITDA is growing at a decent enough CAGR. What happened to PAT? What is the problem? If EBITDA is positive, why it is loss after tax? What's the problem? Where is the pain point? Pain point is that their depreciation is very high. Why depreciation is high? You can see that the total assets are increasing very nicely. There's a great possibility that they are investing a lot of money in opening up newer and newer restaurants, because of which depreciation is high. Possibility number one. Possibility number two, they are adding up more and more restaurants not by owning them directly but by taking them on lease, and that is the reason why their lease liability is also increasing. These are the two major reasons why they are into losses at profit after tax level, I mean at the bottom line. This is again proven by the point wherever you can see CFI, which is cash flow from investing, that was negative for a very long time. It shows that they are investing more and more into opening newer and newer restaurants maybe. If you even check CFO, cash flow from operations, it was pretty nice till 31st March 2020 year ended. This time, because of lockdown for the 8 months ended November 2020, it is still positive, but the amount is very less. If you check out the ratios now, debt to equity ratio, it's negative. Why equity is negative? They're into losses, reserves are into negative. Price to cash flow, it's this ratio I'm considering for the very first time in my IPO review videos, is 43.6. Now, what does this mean? Price to cash flow. It means that that the company is demanding, because it's an IPO, the company is demanding 43.6 rupees of per operating cash flow. So if their operating cash flow is 1 rupee, company is demanding 43.6 rupees for that 1 rupee. Okay, that has gone up from 7.7 for 31st March year ended 20 to 43.6 directly for 8 months ended November 2020. Current ratio is only 0.2, which is pretty less. And return on net worth is NM. Now, what is this NM? Not worth mentioning. This is not what I say. It has been given in the red herring prospectus, right? Then if we go on to the peer comparison, again, they have compared it with Jubilant Foodworks, Westlife, Burger King, which I feel is not a good comparison, because all these three which I mentioned right now are in the QSR space. What is QSR? It's a quick service restaurant, and this one is into CDR. It's a casual dining restaurant. So I can say that barbecue and specialty restaurants is like mainland China brand. Okay, so they are good comparisons. They are good peers, I can say. So if I check out, barbecue is way ahead in terms of revenue, in terms of income, if I compare barbecue versus specialty. But if I now talk about EPS, barbecue is more, but that is a negative figure. Okay, so barbecue is minus 11, and if I talk about specialty, it's minus 8.09. If I talk about NAV, it's just 2.11 rupees per share. Specialty is at 34.88. Return on net worth is minus 556.59%, and specialty restaurant is minus 23.20%. Actually, it seems like it's a competition. कौन ज़्यादा negative में numbers report कर रहा है is what I feel. Anyways, if I go to the valuation part now, again I can't do a PE valuation because earnings are negative. Price to cash flow, if I talk about this parameter, you can check out on the screen. I can say that it's the best. I mean, it's pretty cheap if I compare it with other peers, Jubilant, Westlife, Burger King. But again, as I said, it's not exact peer. If I compare it with specialty restaurant is minus 15.8 and barbecue is 43.6. Let's move on with the risk factors. The very first one is that Mr. Kayum Dhanani, who is the promoter and managing director of the company, he had taken a loan of 400 million rupees by pledging his shares. How many shares have been pledged? 5,22,846 shares which were held by him. And who is this? Again, I'm mentioning he is the promoter and managing director. Now, As a date 31st January 2021, as on this date, now the loan amount has gone down from 400 million to 246 million, and the pledged shares, which were initially 520 to 846, now they have come down to 3,33,400. But still, that's a big chunk which is still pledged by the promoter and managing director. Second risk factor which I found, you can check out at this table again, that almost all their subsidiaries as at fiscal year 2020 all are in losses, barring one which I can see, which is Summer Retail Private Limited. It's in positive, but all others are showing negative figures. So this is also a risk factor. All the subsidiaries not showing up good financials. Third one risk factor, which I personally feel is not a risk factor as such. They have mentioned it on the risk factors page number 62 of Red Herring Prospectus, but they have issued equity shares as a preferential allotment at 252 rupees per share. Okay, now if preferential shares allotment has been done at 252, what is the IPO price that they are coming at with? The IPO price that they are coming up with is 498 to 500 per share. So you can understand that the preferential allotment was done almost at a half a price of the IPO price. Okay, if I go on with the IPO details now, other than the IPO price, IPO opens on 24th March, closes on 26th of March, and it's an offer for sale plus fresh issue. Offer for sale is coming to 272 crore rupees, whatever point, whatever, and fresh issue is aggregating up to 180 crore rupees. What are they going to use this money for? Mainly, they are going to use it for repaying the borrowings that they have taken. They're also going to use it for meeting the general corporate purposes. Now if I go to the future plans, interesting point again, what are they planning to do in the future? They are also planning to increase the same store sales. So whatever stores they have, they are planning to increase the same store sales. Second one, they're planning to increase the delivery business. If you remember, in the beginning of the video I've talked about the delivery business as well. They're planning to expand their network in metro cities, tier 1, tier 2, tier 3 cities, and they're also planning to do a cost optimization. Are there any litigations against the company? We went through the RHP, but we didn't find any major litigation against the company. So let's directly come to the fun fact. Some interesting data points we try to correlate. This is not given in the RHP because we are trying to do here about a peer comparison, not about their financials, but what was their issue price, what was their listing price, and what is today's price, LTP, I can say, last traded price. For specialty restaurants, which is one of their major peers, the issue price was 150. It had very minor listing gains. The listing price was 153, and the last traded price is 42 rupees. Okay. Jubilant Foodworks, which is again one of their peers, not direct peers though, it's in the QSR category. Issue price 145, listing price 161, so not a big deal in the listing price. LTP is 2879.30, and this includes one split in the ratio of 2:1, so it's much higher than this. Third one, again the QSR space, Burger King, which is one of the recent listings, so a bumper listing. Issue price was 60, listing price 115, and LTP is 137. I hope you found this piece as a pretty interesting data point. Well, a homework coming up for you. You have to tell me whether Jubilant Foodworks holds any stake in this company, and if yes, then how much percentage? Well, I hope you've enjoyed the analysis of this company as well. If you want to know whether I'm going to apply for this or not, we are going to meet at a live stream 12 noon on 26th March. Till then, take care, Jai Hind, and bye bye.